Hi and welcome to Master Investor 2019. My name's James Faulkner. I'm the editor of Master Investor magazine and I'm joined by Dan Whitestone, manager of Throgmorton Trust. Hi Dan, good to have you in the show. You invest in small and mid-cap companies. Just tell us a bit about why this is such a great hunting ground for a stock picker.
Well, small mid-caps have proved to be a great place to invest because ultimately they have outperform large caps by 4% compound for many years. So £1 allocated to small mid caps has proved to be a far better investment than £1 allocated to large caps. And why is that? I think because to create a successful small mid cap company, you have to have something differentiated, something special that enables you to sort of win market share or open up a new market. Often you're operating in a fragmented market, so you can take share and you can grow and compound those returns for many years, and that's why the market capitalizations can go up so many times. So I think it's a really exciting place to invest. There's lots of inefficiency, it's not very well researched, and there's some very compelling exciting companies coming through who can grow their earnings at very high rates for many years to come.
And when people think about small companies, they tend to think about risk, don't they?
Definitely, yeah.
But I suppose it's important to get across that when you're looking at small companies, you have to take a long-term view and be prepared to kind of sit and wait for good things to happen.
Yeah. Well, what I say to that is that in the small mid-cap universe in the UK, there are 1,600 companies to choose from. All everyone ever talks about is the FTSE 100, okay? But beneath the FTSE 100 are 1,600 companies. And there are some great companies there. I mean, I'm the first person to say that the best form of risk control in investing in small mega companies is have a diversified portfolio. I myself have a diversified portfolio.
How many companies are in the portfolio at the moment?
There are, in the investment trust, there are around 120, which is around 70 longs and 50 short positions, because this trust can short shares as well as go long. So we don't expose lots of capital to one individual share through the fear that sometimes there can be disappointments. But that's why it's so important, I think, when you invest in small and mid-cap companies, that you find companies that are profitable and are self-funding. We really avoid companies that have lots of debt, companies that can't generate cash flow, because that's how you can lose a lot of money very quickly if there's a problem with their revenues. Okay, so you've got to make sure these companies are financially sound and stable, so profits matter, but cash flow matters even more, and the strength of the balance sheet really matters.
And talking about the companies that you're not so keen on, you do actually, as you mentioned, you follow a long short strategy. Shorting meaning that you actually almost bet against stocks and expect the share price to go down. That's quite unusual, isn't it, for a fund like yours?
Yes, it's one of the key differentiators about Throgmorton is that we can short shares as well as participate in the upside from the wealth creation that these great companies can deliver for shareholders over time. We can also benefit and profit from companies that fall. What we look for in shorts is pretty much the opposite of what we like in longs. We look for companies that basically have weak management teams, but more importantly have weak business models, no pricing power, often commoditized industries, and key is they have weak financial structures, so they have too much debt. They can't generate cash flow. These things we think are all the ingredients for bad investments. So we want to avoid those or short them, or we want to short the other category of things that we like, which to define in shorts is companies are under massive structural pressure, like the legacy incumbents who are being undermined by exciting, disruptive, emerging companies breaking through.
I don't really want to mention it because I think everybody's pretty much fed up of it. But Brexit, what implications does Brexit have for your portfolio, and how are the companies in your portfolio preparing for Brexit?
Okay. Well, the first thing to say is I obviously have no idea what is going to happen with Brexit, and no one does. So I can't build a portfolio because of that. So the key thing is for me is to build a portfolio that I think can prosper in the long term. So I'm not trying to be flippant, but if you own a portfolio full of like banks and retailers, the outcome of Brexit I think is much more relevant to you. But I don't. If you have a portfolio full of like differentiated, disruptive, internationally global focused companies, these companies can prosper and thrive whatever happens to Brexit. As I made the point earlier on, like in the last 4 years when Fever Tree's gone up however many times, think of how many things we had to worry about in the world or in the UK. These great companies can shrug off these macroeconomic issues. So I just need to focus on these differentiated, long-term compounding winners that are driven by much more structural trends than just the vagaries of the consumer cycle. In terms of companies dealing for it, as you'd expect, one of the reasons we like companies that have strong balance sheets is that it means they can weather the storm whatever happens. But also, companies generate lots of cash flow, have the cash flows to reinvest in their business. And as we would expect, lots of our great companies have been making strong contingency plans for some time now, investing in extra stock or inventory, finding new supplier agreements, finding ways to navigate whatever may happen so it doesn't impede on their growth and on their long-term business returns. And again, only well-capitalised, financially strong companies can do that. If you've got far too much debt and you haven't got any cash flow and everybody's under pressure, it's quite hard to. You haven't got anything you've got no slack in your profit and loss statement and your cash flow to help you, deal with problems like Brexit that may come along.
Okay.
Okay.
Dan Whitestone.
Great.
Thank you very much.
Nice to meet you.